Are you self-employed or have a blemish credit or don't have enough down payment and trying to qualify for the mortgage and the bank says no? If that's you, you may want to listen to this presentation. My name is Yuriy.nesvit. I'm with eXp Realty and I'm also a mortgage broker, so I qualify to talk on this subject. So hypothetically, you're self-employed and you're making $200,000 gross income. Everything seems to be fine and dandy, and you tell your broker or bank saying, "Well, yeah, I'm making $200,000." They're gonna ask you, Is it gross or net?" And you say, "Well, no, it's gross. What's your net?" And oh, I'm making $24,000 net a year. Most what you're gonna qualify for is about $100,000 on that amount, that kind of stuff. And you definitely not gonna qualify for any mortgage. So hypothetically speaking, you want to buy a $500,000 home, you have $100,000 down payment, and you're going to need $400,000 mortgage. Your options are basically either conventional mortgage, which you don't qualify for, or you go for B lender or C lender or private lender, whichever you want to call it. On a B side, you're not looking at much higher rates. You might be looking in the 4, 5, 6% range, but you may not qualify for those either if you're making that kind of money. Now, if you go into the private route, you end up with about 10%, 8% interest rate and 2% lender fee, so $40,000 on an annual basis. And what does it take for self-employed to get approved for the mortgage? The bank will require 2 years of financial statements and with the net income sufficient to cover the debt. So you will need 2 years of records. Basically, you will have to stay in a private mortgage for 2 years and will end up paying close to $80,000, right? Which is insane in my mind. Where on a $400,000 at 3%, you're only looking at $12,000 payment. So if we do that, so I guess we don't like that, right? So let's cross this out. We don't want to go that route. Now, for you to make that $400,000, you need to do $90,000 income. If you do that and claim that a net income, you will pay to the government 30% or $27,000 on annual basis, which is going to be $54,000 over 2 years. Now, it's a little bit less than this. However, during these 2 years, the market increased by 26% this year and 23% last year, which equates to 50% increase over 2 years. So if you were to buy this, 2 years ago or like now, and you were preparing for 2 years, this price would have been $600,000, right? You lost $200,000 right there. So you paid 54,000. Then you lost 200,000 there. So your loss is $250,000. So that's kind of not a good option at this point, right? So what do? Basically, there is a solution for that. We work with the company that does rent to own, and under normal circumstances, I say if you qualify, then don't wait for 2 years. Don't get into this program. However, right now, because you're losing out so much on the market increase, and also it still takes you 2 years to qualify for this thing. So why don't the solution is you can get into the house right now, into the market right now, and the program is 2-3 years depending on your financial position, right? You have to pay about 3 to 5%. Sorry, it's not 8. 3 to 5% down payment to get into the program. It's okay if you don't have a perfect score, credit score. It's okay if you don't have enough down payment, or it's okay if you don't have income. You're going to have 2 to 3 years to correct those things. If you have $100,000, it makes it a little bit easier. And the reason for that is the monthly payment on that program consists of your principal and interest payment, which is a normal mortgage payment that somebody gets for you. And on top of that, you gain property taxes. On top of that, you're paying maintenance, utilities. But if you don't have that $100,000 and you only put 3 to 5%, the company, just to protect you, will establish a the certain amount that to cover the missing down payment, basically, that you might be short because the price will increase, and you may have to supplement your down payment. So they're gonna establish certain amount of a month, maybe $300, maybe $500, maybe $800. I don't know what that is, but that's going to be on top of everything else. So that might be quite hefty. But if you have $100,000, you for the down payment, you most likely qualify or have enough for the down payment, and you will only need to pay your mortgage payment, your property taxes, and maintenance. Right? It would be quite comparable to the rent that you're paying right now, and or may have to pay. And the rents increased substantially as well. So if you do like this topic and you're interested in hearing more, stay tuned and click the subscribe button, like the video, and click the notification bell so you will receive future videos, because next week we're going to have a full blown interview with the owner of the company that does this, and we will basically go over a lot more details to uncover all of the details and present it to you. It helps me going as well, gets me motivated, and if you don't want to wait for that presentation, by all means you can reach out to me, either dial in my number or emailing me or texting, whichever makes you happy, or whichever works better for you. And I'll be happy to go over this subject. I mean, we haven't touched, we just scraped the surface. We didn't go over all of the details. You definitely can poke many holes in it, but we definitely have an answer for, most likely have an answer for anything you have. Just a bit of an overview of the program. So give us a call and we'll be happy to go over the details. Thank you so much. Have a great day. Bye-bye.